This is a demonstration of problem 733B, preparing a bank reconciliation in journal entries. On May 31st, Donald Insurance received the following bank statement, and the problem gives us the bank statement information for May. Then the problem states that the May cash records of Donald Insurance are as follows, and they give us the cash receipts and the cash payments for May, and they tell us that the cash account had a balance of $17,750 on May 31st. Then they give us some additional data for the bank reconciliation. So the first thing that we want to do whenever we are going to be working on the bank reconciliation is to first look to see which deposits or debits that we made in our cash records were not recorded by the bank on the bank statement, because those are going to be bank additions on the bank reconciliation. So we go to our cash receipts and we look to see if each one of these deposits showed up on the bank statement. We see that the $4,230 deposit cleared, the $520 deposit cleared, the $530 deposit, and the $1,950 deposit did clear. However, we don't see where this $1,840 deposit made it. So that's going to be a bank addition on our bank reconciliation that we're going to complete in just a minute. The next thing we want to do is to see if all of our checks that we wrote cleared the bank. So we go through and at the correct amount. So we go through and we look at those. We see check 1416 made it, check number 1417, 1418, and we do see where 1419 cleared, but it cleared at a different amount. So that's going to require us to do some additional research to see whether or not which of these entries were correct and how to make the entry to correct those. So we need to remember that. We'll have some additional information on that in just a minute. But we also do not see where check 1420, 21, or 22 cleared the bank. So each one of those is going to have to be on our bank statement or bank reconciliation as a bank subtraction. So we just want to note those for completing the bank side of the bank reconciliation. Now let's look at the additional information that we've been given in the problem so we can determine the other items that are listed and how we need to handle those on the book side. So we see that the EFT credit was a receipt of rent and the EFT debit was an insurance payment. So they're referring to these items here that are shown as EFT amounts. So we know that if they collected rent from us, that's going to be a book addition on the book side, and we would also have to make an entry for that. And the insurance payment would be a book subtraction, and we would also need to make an entry for that. The NSF check that was received from a customer means that we deposited this $1,100 previously, but then it was rejected when it went to the customer's bank. So that means that it has now been subtracted from our account, so it will be a book subtraction on the bank reconciliation, and we would also have to set that accounts receivable back up to show that the customer still owes us. Then it states that the $1,700 bank collection was for a note receivable, so they're referring to this bank collection. That means that the bank collected a note for us, so that's going to be a book addition when we do our bank reconciliation. Then the last one, D, says that the correct amount of check 1419 for rent expense is actually the $1,900, and Donald's controller mistakenly recorded the check for $1,090. So that means that this entry is actually incorrect. So the difference is going to be a bank subtraction, and that would be for $810, because the difference between $1,900 and $1,090 is $810. Okay, So we've gone through and we have recorded all of the information or looked at the whole bank statement, because if you notice, every item has been looked at except for the service charge, and we remember that service charges are always going to be recorded as a book subtraction. So I think we're ready to start working on our bank reconciliation. Now the first side I usually do is going to be the bank side. We start out with the balance that we are given on the bank statement, which is $18,730. Then the next thing that we want to list is our deposits in transit. If you remember, we had $1,840 as a bank addition for a deposit in transit. So we're going to record that amount. We get a subtotal, and now we're going to record our outstanding checks, and those we noted up here, $1,420, $900, and $670. So we're going to list each one of those as a bank subtraction. Those are our outstanding checks that have not yet cleared the bank, but we did write them, so we want to go ahead and subtract them. And that is all of the bank side of the bank reconciliation, and we have our adjusted balance for the bank of $17,580. Now we're ready to do the book side. Remember, they gave us a cash account balance of $17,750 on May 31st. So that's what we start out with on the book side. Now we want to add our book additions. If you remember, we have the EFT credit for the receipt of the rent, and that was $450. And we have the book addition for the bank collection of the note receivable, which was $1,700. And those are our two book additions. Now we're going to have our book subtractions. The first subtraction we're going to make is to correct check number 1419. If you remember, we wrote that or recorded that incorrectly in our book, so we need to subtract an additional $810. We also had that insufficient funds check, if you remember, and that was for $1,100. We also paid our insurance payment for the month, EFT, so that was $375. And then the last subtraction is our service charge for $35. So we notice now we have completed the book side of the bank reconciliation, and our adjusted book balance is $17,580, and that matches our adjusted bank balance as of May 31st. So we know now that we have successfully completed the bank reconciliation. But remember, we're not through, because even though we have done the reconciliation, we still need to record all of the information for the book side in our books. So we've got to go through and make the entries in requirement 2 to journalize the transactions from the book side of the bank reconciliation. So the first entry we're going to make is to record the collection of the rent. So we will debit cash for $450, and we will credit rent revenue for $450, and that will get that amount in our books. We're going to debit cash for the note that was collected, $1,700, and we're going to credit notes receivable for $1,700 to show that collection of that note. The next thing we're going to do is correct that check that we incorrectly recorded at $1,090 when it really should have been $1,900. So we're going to debit rent expense for $810, and we're going to credit cash for $810. Next, we're going to set back up the accounts receivable for the customer's insufficient funds check by debiting accounts receivable and crediting cash for $1,100. And then we're going to record the insurance expense for the EFT payment of $375 that we paid through our account. And then the next thing is we're going to record the service charge. So that'll be a $35 debit to bank expense and a $35 credit to cash. The last part of the problem asked us to do a T account that would show the posting of each of these entries into our cash account, so we can see how that works as far as getting to that adjusted book balance. So our debit of $450 would go in, our debit of $1,700 to cash. Those are our additions. And now we'll record our subtractions, the $810 for the error, $1,100 for the insufficient funds check, $375 for the rent that was paid, and then our last entry is going to be $35 for the service charge. And we notice that we have $19,900 debit, subtract $2,320 in credits, and that gives us an ending balance of $17,580 in our cash account, which is correct according to the bank reconciliation. And now we are through doing our problem 733B.